Bitcoin surges up 7%. But what is causing this latest pump, and is it sustainable? I found the exact reason we're seeing a move to the upside. We're going to break that down here on this video, and we're going to take a look to see if this is sustainable or if we're expecting another leg to the downside. Guys, don't forget to smash the like button. Don't forget to subscribe. As always, if you want to trade any of these moves, you can do so using BYBIT or BitGet. Links in the description to some amazing bonuses. Now, as you can see, guys, check this chart out. You can see we got this nice big breakout here on the hourly chart while I was getting a few hours of nap over the night here in the UK. 7% up here on Bitcoin. A nice breakout. You can see we were monitoring this falling wedge, which we mentioned probabilistically more times than not breaks to the upside. It's a bullish pattern, and indeed we got that. We got a bit of a cautious breakout to the upside, reached the top of the wedge nice and cautiously, and then a big couple of hours of candlesticks to the upside. Now we're sitting at 20,600 range. We're in the middle of this channel, right? If I just pop out to the 4 hourly here, you can see we're in the middle of this big channel between 18,700 and 22,000. Now the question is, can we mount an attack back to 22,000, or are we coming back down for our next leg? The reality is nobody knows the answer to that question, but we have to look to see what is the most likely in terms of probability of happening, and then place our investment decisions based on that. Anybody who tells you, oh, we're definitely heading down, oh, we're definitely going up, that's a red flag straight away, because if they knew the markets, would they not be the biggest trillionaire on the planet? So always take that with a pinch of salt if anybody's giving you these guaranteed, or even making statements like that without saying most likely we're heading here. The probability is more likely here, or the data is showing that we could be heading here. That is the reality of what we can get from TA and fundamental analysis. Now, what is causing this? If we head on over to the US markets, we can see that the pre-markets are up, right? What's this excitement about? We've got 1% up on the Nasdaq futures, S&P 0.8 up, Dow 0.8 up as well. Interesting. Fear and greed index notched up a bit, so a little bit of that fear has gone. Interesting. No doubt when you refresh that tomorrow, go higher as well. If we look at the Fed rate monitored tool, we can see 85% is still pricing in 75 basis points. So where is this excitement coming from? What is going on? Well, on deeper diving, you notice a few things, and I want to walk through them. The first thing I noticed when scanning all these indicators when I woke up was Bitcoin dominance. First thing you look at is the Bitcoin dominance, and you get this beautiful, can you see this support line we've had on Bitcoin dominance at 39.65? We've had that drawn on for a very long time. If I zoom out here on the daily, you will see how it acts as support, right? That's the first thing I want you to know, the 39.95 mark here. Now, when I zoom in onto the 4 hourly, you'll see we fell below it, right? Which is getting to unprecedented territory. And I made a video saying this is very interesting. This shows that retail was still in the markets because they were still pushing down these altcoins. But what we saw here was a nice double bottom pattern, a perfect W pattern here on the Bitcoin dominance. And now Bitcoin is having its move. This is a Bitcoin move today. Okay, Bitcoin is up 7%. None of the altcoins are keeping up. For those of you who are new in the market or haven't seen this, this is very common. And this is why you cannot time your movements from Bitcoin into altcoins and be like, oh, it's altcoin season now. Oh, I'm going to move into Bitcoin. It just doesn't work. You get caught out and you miss some of the most powerful days on Bitcoin. If you've been around a while, Bitcoin has a handful of these explosive days. And if you're not in the market on those days, you're going to struggle, which is why I sit in the market. I take the good with the good and I take the bad with the bad as well, because I don't want to miss days like this. Doesn't matter how good an investor you are, how good a trader you are. If you miss a couple of days like this where it's 7% up and this decides to go to the upside, you're in a difficult position because you're missing some of the best days of gains. Okay, so we're seeing that. It's a Bitcoin only move. Then when I flicked down, I thought, let's take a look at the dollar index, right? So I thought, okay, naturally we're going to have a look at the dollar index. And that's where you see here on the 4 hourly, a big dump on the dollar index. So aha moment, right? This is what's causing this. This is what's allowing Bitcoin to go. So remember, dollar index is inversely correlated to Bitcoin. I've made numerous videos over the last, I don't know how long period, saying that we're not going to get a sustained move until dollar index really decides to cool off. Now, what we're seeing here is a 4 hour cooling off here. So this has lost its 4 hourly EMA ribbon. So this is a decent time frame, right? It's not the daily chart. I'll come on to that shortly. But at least on the 4 hourly chart, this has shown some weakness to the downside. I'm going to come on to what potentially caused that, because I've got a few data points backing up what is causing this fall in the dollar index. Remember, it's important to remember that the dollar index rises and shows strength, like we've been seeing some crazy strength on this dollar index over the last period of time during times of uncertainty, okay? And this is important. Dollar index rises when there's periods of uncertainty. When the markets are uncertain, they flock to the dollar and these asset classes in this basket, okay? That's why it shows strength. Now, when you get certainty in the market, that's what investors want. When investors have certainty, they can rotate a little more onto risk on. You have to remember, institutions, retail investors, even sophisticated retail investors, they want return on their funds. They're not here to sit in the market and just sit on their hands with their cash in their pockets, right? Yes, they would do that during difficult times, but when the market is showing signs of certainty, when they can see the outlook, they can see the horizon of what's to come, they do want to take risks. Ultimately, that's what their job is. They take client funds and they try to deliver a return. So they can't just sit there, in a risk-off mode forever like we have been throughout this year. So whenever these opportunities present themselves, you will see this happen. So it's important to notice that. So that's the first thing I want to touch upon, is there is more certainty in the market. Now, why is there more certainty? Well, a few things. Jerome Powell came out yesterday and he spoke and he said exactly what the market's expected, right? And so the market feels confident that, okay, we're on top of this. We know what Jerome Powell's feeling. We've already priced in the 75 basis point hike. We do not expect him to do 100 basis points. Now, keep in mind, when CPI comes out next week on the 13th of September, that could change the market's mind. And the market will have to adjust this, what they priced in, accordingly. Okay, so if the CPI is a shock horror, then this could adjust. But for now, they're expecting CPI to show some improvements. I'm going to show you why very shortly. And that is why they're quite comfortable saying, you know what, 75 basis points is priced in. We're not too concerned by this. And if you check out this tweet by Charlie Bilio said, look, the market's expectations for Fed hikes at the next 4 FOMC meetings. So he's saying September, 75 basis points. Then he's expecting November, 50 basis points, December, 25 basis points, and a no hike in January, as soon as January goes. That's not far away. I know it feels like it for many of you, but that is not far away considering the big move we can start to get when the Fed pivots. But here's the important thing. When you get the no hike is not the important bit. The big important bit we need to focus on is this bit. That's the key one, because that's when the Fed decide to pivot. It's at the moment that they stop doing 75 basis points and don't go higher, right? So if they go 75 basis points to 100 basis points, they're further tightening the economy. But if they move from 75 basis points to a 50 basis points, that's the moment they've pivoted. And if you analyze historical bear market bottoms in the equity markets, you see that the bottom doesn't actually come into play until the Fed actually pivots their monetary policy. So that would be at this point where they go from tightening to slowly starting to loosen again. And this is what Jerome Powell was warning about yesterday, to say history has shown us that we do not want to loosen too early. Now, whether it's exactly this 70, 50, 25 is yet to be known. I mean, if you go into the Fed rate monitor tool, you can see the market's priced in 75 basis points. In November, they've priced in another 25 basis points. And then they've priced in another 25 basis points. So they're going 75, 25, 25, but this changes all the time based on new data that comes out. So it's a little bit silly to kind of predict too far ahead. More importantly, you can go, okay, the next one looks like 75 basis points. And then if CPI continues to resolve itself, then perhaps we can be in for a pivot down to that 50 basis points by Q4. And that's what I'm looking out for personally, is I'm expecting in that November meeting that we do see that pivot. And I think that could be really, really exciting, because a lot of people are arguing that the Fed cannot afford to have Fed funds rate above 3.5%. If they do that, they really could affect damaging the economy and throwing us into a deep, painful recession. And that's not something that they're going to want to do, especially if they can see CPI coming to the downside. That is why September the 13th is so important, and we're going to cover it on this channel. Right, so a whole bunch more to cover off, so make sure you guys stay tuned. But we need to find out, why is the markets expecting CPI to come down? And this is one of the reasons first. If you look at the global supply chain pressure index, this gives you a gauge of how much pressure the global supply chain is under. And you can see this is showing a good trend here in the last few quarters. We are seeing this come down, which is really, really positive. If we also take a look at the China PPI, Producer Price Index, which is their measure of producer inflation, which has just come out, you can see that came in at 2.3% versus the forecast of 3.1%. So inflation is improving over in China, which is a good lead measure for the rest of the globe as well. If we look at the 5-year break even and the 5-year forward inflation figures, this gives you what the market expects to see in future inflation. And again, remember, the Fed wants to keep inflation at 2%. And you can see we're coming into that range now, which is really good. If consumers are expecting inflation around the 2% mark, that is good. So we're in line with the Fed's inflation. And in other words, the market is expecting less inflation going forward. If I show you this on the 5-year break even, this is the 5-year break even that we're looking at here. You can see this blue line. Just ignore all the other lines, but just focus on the blue line here. In fact, let's see if I can get this cleaner. There we go. And you can see this is ticking down, okay? We're now at 2.46. This is 2.46, which is, again, coming closer to that Fed's expectations of inflation, okay? So this is really, really good news that the consumers are expecting less and less inflation. And that's what's helping markets rotate a little bit risk on today. So what does this mean for the Bitcoin chart? Let's head on straight into the Bitcoin chart. And a few warnings I do want to give you guys is the following. The first is on the Dixie. And on the Dixie, yes, the 4-hourly EMA ribbon looks good. They've broken it to the downside, which is fantastic. But I do want to remind you of this. This is your daily EMA ribbon. Remember, Bitcoin can't go on a sustained daily run, multiple days and having a couple of weeks of running until this dollar index loses its EMA ribbon on the daily, right? We got really close here and look how it bounced with vengeance. And we don't want to fall for the same. So entering a position here when this could just bounce and do that is very, very dangerous. So for me, I'd much rather wait till this loses its EMA ribbon, closes below it and works its way to the downside. That is when we can get a sustained move here on Bitcoin. Similarly, on the weekly, the dollar index can afford a good couple of weeks without even breaking a sweat, right? The dollar index can call off, come into its EMA ribbon. We've seen here in the last few, it's just had 2 weeks here, 2 weeks of calling off, and then it just went again. And then it had a couple of weeks of calling off, and then it just went again. So don't be surprised if it had a couple of weeks of calling off where Bitcoin does pretty well for a few weeks before the next run up to the upside. Now, the only difference here is we do have CPI next week, so that could throw a spanner in the works of this pattern. So we need to pay attention to the macroeconomy. We can't just look at technicals on their own. Now, let's look at Bitcoin. Where could we be heading here? I'm going to switch over to the 4-hourly chart because what I'm going to show you is we have indeed flipped our 4-hourly EMA bullish. That's great, right? We've seen that's the opposite of what's happening on the dollar index, but I do want to warn you of this daily EMA ribbon. We are running into our daily EMA ribbon, just like the dollar index is trying to bounce from its daily EMA ribbon. The Bitcoin is trying to get rejected, right? The bears are trying to push us back down. So we've seen this before. We have to give credit to the bears. This is the bears trend, right? We moved in before, we've got rejected. We moved sideways before we even got sent back down. And now the question is, are the bears going to come in and send us back down from here? This is the battle of the EMA ribbon right now. For Bitcoin, Bitcoin needs to grind its way above above here, 21,700, and then get above that 22 level, hold above the top of this channel, and that's its escape route from here. Now, if it does do that, then the double bottom, which we were talking about on the weekly chart, starts to look really nice, right? Because the neckline is at 24,000. But let's take it step by step. First, we got to do exactly what we just said. Get above here, get to the top of the channel at 22, and hold above it. Then we can start talking about 24. And if we get above 24, then we are looking at this double bottom pattern, which is a nice double bottom pattern, which on the weekly chart can get us back out of trouble. So that's our route to escape, but we have to understand that the macroeconomy is not on side just yet. But that could change next week when we get our CPI reading. If CPI shows a big trended improvement, then I want to make sure that I'm ready for the next impulsive move to the upside. Please do check out CoinPanel as well. Guys, they've got an amazing portfolio feature here. This is an absolute game changer for me. And I've been using this every single day. So what you can do here is you can link up all your different exchanges to CoinPanel. And I've said that before in the past videos. And what that enables you to do is trade using all your different accounts on one login. Game changer. But here's what's even more powerful. I can then come into the report sections here. I can click on portfolio, choose my different accounts. I choose my BYBIT account, my KuCoin, Kraken, Binance, and then I get a portfolio. Right? I get a full portfolio split, and this is just representative, guys. This is not my exact portfolio, so don't go copying this. But this is just representative, but it will show you exactly how much Ethereum I hold and how much is split between Binance and KuCoin, how much BNB I hold, and which platforms is it split up by. So I can straight away see how much percentage cash I have. I'm sitting on 13.7% cash, and then I can see the breakdown of all my amounts across exchanges. This is an absolute no-brainer, guys, because what I used to have to do was use a spreadsheet, right? Oh, I've got this much Bitcoin on Binance, I've got this much on Gemini, and then I've got this much on FTX. It combines it all into one place. So simply, I can click on my Bitcoin, and I can see this is the total amount I've got. That's how much of that is in BYBIT, that much is in KuCoin, that much is in Binance, and we're good to go. I've got that all in one place, so I don't have to worry about anything. And then on top of that, I can click on Analytics, and I can see my live P&L in real time. So this is one of the biggest problems. If you're using BYBIT, BitGet, all these platforms, they provide you a P&L for any of your derivative trades. But what if you're just trading spot, right? I know a lot of you guys, including myself, do a lot of work on spot for our long-term investments. Why does no one care about us? Well, finally, with CoinPanel, we can see that. This is something I've been looking for a long time. And now I can see if I buy BTC, I can see what my return on equity is. I can see my P&L on the spot markets, and that makes my life so much easier. And again, it does that regardless of which exchange I'm trading on, as long as I connect it all up into CoinPanel. So definitely, guys, check out the links in the description to CoinPanel to get yourself set up. And as you can see, one more thing I do want to point out is look at LUNC today. Okay, I do want to make a quick mention for LUNC because I know a lot of you guys have been asking me about it. Let me just pull it up 1 second. Where did I put you, LUNC? There you go. Okay, so one thing I do want to mention, LUNC's been on an absolute rip here, guys. But one thing I do want to say is you do see a little bit of a less movement on days when Bitcoin has crazy days. So we're only 1% up today, despite 7% Bitcoin up. Why is that? Surely LUNC will go crazy if Bitcoin's going crazy. It doesn't work like that. Remember, LUNC was moving off of momentum. People are bored. The Bitcoin market was boring, and therefore they start trading LUNC because it was the only thing moving. So those speculators, those who aren't terror rebels, who don't believe in the long-term mission, if they see suddenly today Bitcoin is moving 7%, they're going to go trade Bitcoin today. So LUNC could actually benefit from the market remaining boring because they're getting all the attention and they're going to get all the trading volume. So that's just one thing to look out for here. If you're trading this momentum, you've got to make sure you are not holding the bag when the music stops. Really important, guys. If you're learning to trade momentum plays, I have nothing against that. Just understand it's not a play based on technical analysis. It's not a play based on fundamental or macroeconomics. It's based on momentum. So you need to be very tuned into knowing how much is the hype, what's the momentum like, do people care right now, do I need to offload right now, and when is the music going to stop? That's the key. Do not be left holding the bag when the music stops. Hope you guys enjoyed this emergency quick earlier video than normal, just to let you guys know exactly what was going on with the Bitcoin price. If you appreciate this update, let me know in the comments below. Don't forget to go watch this Polygon Matic video here, and I'll see you in the next one.